what I shared, because I gave you so much this week. In the previous week, I don't know when I told you about the macro in the last hour being 3:15, which would be represented by in your chart if you have trading view set to New York local time. It would be 15:15 to 15:45. So 1/4 past the hour to 1/4 before the last of the hour. That 30-minute interval, there is a last hour macro that runs, and I'm going to explain that to you here. If you look on the right-hand side of your chart, take one more swig of this spring water here. Are you enjoying this kind of lesson? I don't enjoy getting yelled at. This is some bullshit. You want to learn how to do it, right? Well, listen to good medicine. Doesn't taste good, but swallow. Final hour macro. There's a little rectangle I have annotated in the price action. The largest lower blue rectangle, it's anchored to the candle at 14:48. Okay, so that fair value gap is extended to the right. I had that extended right over in the live session yesterday, and I was watching and observing and seeing, because we had all of the volume imbalances in that segment of price action that is seen between the high of 15:19, which would be the little short-term high that bumped up to the bottom of the middle rectangle, not the volume imbalance, not that little thin one, but that high down to the low formed inside of the fair value gap around 40.8750 in price, but the time is 15:25 or 25 minutes after 3. In between that range, there's multiple fair value gaps. I'm sorry, multiple volume imbalances. So it's spotty. And I mentioned this yesterday. And for a better understanding of what I mean by what I'm saying here, you can literally just watch the PM session, final hour of live stream I did yesterday. I actually talk about that as it's occurring, and it causes a little bit of uncertainty. It makes it harder. It's a harder read on price action. So you have to wait for it to do whatever it's going to do and then use what it gives you after that. Meaning, I was expecting it to maybe dig down into here and then run here. It went down to the original fair value gap I had noted here. And then as it went down here, I said, I'm going to pull it down to this one. I'm actually talking over a chart like you're fucking seeing it. Sorry. I was looking at the fair value gap formed at 232. So on your 232, or what will be represented on your trading view chart at 14:32, that fair value gap is where I annotated and changed the fair value gap to that one. Just watch the live stream that I did yesterday. You know exactly what I'm talking about. So it's kind of like that's supported documentation for what I'm teaching here today. Because there's a lot of volume imbalances inside the price action between 3:17 and 3:28, that's spotty price action, you have to wait for the displacement. Where's the draw on liquidity? The highs at 4,100 and plus. So what are we going to look for? You wait for the displacement. We see that happen on the 329, or what we represented by 15:29 candle. We break higher above a short-term high that's formed. The short-term high that's there, it's 15:26, that minute candle. It rips through it and trades, and we go watch that afternoon session live stream. I said, I want to see it trade above the fair value gap that is on the 3:15 candle, or represented by time on trading view at 15:15. I want to see it go above that and come back down and act as support. Wouldn't you know it? It trades all the way back down to the lowest point of the fair value gap on the 15:34 candle, or 34 minutes after 3. Where does that occur? It's inside what? About the midpoint of that last hour macro. Remember, 3:15 to 3:45. It's going to create a price run on liquidity that has not been purged. Where's that? Those relative equal highs. your attention was taken to those relative equal highs anyway. So now we're looking at a very specific, quote unquote, scientific event. There's an imbalance, that fair value gap that's on the 14-minute candle after 3. In other words, 15:14 for time. That little middle rectangle that's basically at the 40.92 level. The low end of that fair value gap price is 4093.50. And it goes exactly to that price and stops dead in its tracks. No fucking zoo patterns, no animal patterns. Elliott wasn't riding no wave here. No supply and demand, no trend line horse shit. It's very specific price points. Very specific. Technical science. And Anton Creole. It ain't technical science. Around here, we use technical science. And nothing fucking comes close to this. There ain't a motherfucker out there that's teaching anything that's like this. Nothing like this. Nothing else is closer than perfect. This precise every fucking day. Come on. Seriously. You don't have to like me, but you got to fucking love this, okay? This is the market. You want to be trading, you want to be precise. This is the stuff you want to be using. And it trades right into that fair value gap. And we want to see what? We want to see it advance higher. Does it show a willingness to go higher? It does. Trades higher and breaks above the last up close candle before it dropped down into that lower fair value gap on the candle at 11 minutes after 3. So 15:11, that up close candle. In the middle of that candle is mean threshold. I mentioned in the live stream, all this stuff was called out loud live in front of like 12,000 people were in there. I said, I want to see it dig through that. That is that little pink level that's anchored to 4095.25 on the chart. I told you as a visual aid. I wanted to see it rip through that, not just dance around it. We had what? It created a volume imbalance at the, what is that? 37-minute after 3. So 15:37-minute marker. That candle opens higher, trades down to the pink line that I have annotated, which is the mean threshold of that bearish order block. Market rallies away from that and then comes back down on the candle at 42 minutes after 3. So 15:42. We overshoot the volume imbalance. That's fine. Volume imbalances can be traded through. I'm very forgiving, and I mentioned this also before. I don't know exactly where I was at in that live session, but volume imbalances, they can trade through them multiple times. But if you know your bias, where it's likely to draw to, at a later time, it can come right back up and go back to respecting the very specific levels, which is the low, the consequent encroachment midpoint, and the high of the volume imbalance. So that's that signature I'm looking for. Does it respect it? Does it allow for continuation going higher? Well, look closer. That low at 42 minutes after 3, so 15:42, we go through the volume imbalance that's formed between the candles of 15:36 and 15:37. So that little volume imbalance where there's no bodies touching or overlapping, it's just a separation from the bodies alone. That's the volume imbalance. It wicks down through it on the candle at 15:42. Then we advance higher, but the next candle we open where we trade down to. The volume imbalance high, which is the opening price on candle 15:37, that opening price is 4095.50. The low of the candle on 15:43, or 43 minutes after 3 New York local time, that low comes in at 4095.50. What's the similar